Everyone, it's Matt Donahue with Mission Financial Planners, and this is your weekly market update for the week ending February 27th. I want to talk about what's driving markets this week because it's not just earnings, it's not just interest rates, and it's definitely not just one big headline. We have a steady economy. Housing prices are still rising, even though modestly. Jobless claims tick slightly higher but remain stable. Core producer inflation rose again, which tells us inflation pressures aren't fully gone, and the markets do reflect that tension. The S&P 500 and the NASDAQ, they were both down just a little bit last week. But here's what's interesting. International markets are up significantly year to date. Emerging markets are leading, and the US dollar does remain under pressure. So what does that mean? Well, a weaker dollar boosts international returns, and it reminds us that diversification still works. Now, layer on top of all that, the big headline, which is the escalating conflict involving Iran. This is not background noise. This will directly impact energy markets. Roughly 20% of global oil flows through the Strait of Hormuz. Any threat to that shipping lane will send oil prices higher, and we've seen that. Oil has surged. Gold surged earlier this week, pulled back a little bit. We'll see where it ends the week. Energy stocks are up. Here's the key connection. Higher oil prices do mean higher inflation risk. Higher inflation risk will mean that the Federal Reserve may have less flexibility to continue cutting rates. That is going to affect bond yields, stock valuations, and borrowing costs. So what do we do with all that? Well, we don't panic, we don't guess, we plan. And that's where disciplined financial planning really matters. First of all, let me touch on diversification. If international markets are leading, that exposure matters, right? The second is risk management. Get a hold of us. Do a stress test on your portfolio. What happens if we have a rough year in 2023? What does that mean for your portfolio? But more importantly, what was the purpose of your portfolio? Was it to help you retire? Was it to help you do something else? We should stress test it. The third thing then is tax planning. Most families donate a ton of stuff, but they don't document it. They don't take full advantage of it. And finally, when we do get to retirement, how do we plan effectively to make sure we're not overpaying in taxes and things like IRMA surcharges on our Medicare? So that's a lot to cover, right? Markets will move, oil will move, government policy will move. But here's the key thing, and this is why the philosophy quotes I always throw at everybody are so important. You cannot control whether the Strait of Hormuz is going to be open today or tomorrow. You don't control OPEC. You don't control Congress. What can you control? Are you diversified? Are you documenting things like charitable giving and distribution strategies so you're getting the most tax efficient use of your money as possible? Are you doing financial planning? Because in uncertain times, integrating your plan is going to win. That means aligning your investments, aligning your tax strategy, and aligning your estate plan. So stay disciplined. If you want to talk with us, we're happy to talk, or just give your advisor a call. Call me, Matt Donahue, call Jason Dufault, call Kenneth Hamilton, but call us. Stay disciplined. And the reason that's so critically important, folks, resilience is built in before the next headline hits. And that's how you're going to navigate 2026. Get a hold of us if you'd like to talk. But otherwise, have a great week, and we will see you all next week.